Hello, everyone, and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. Global financial markets retained upward bias following strong corporate earnings, accommodative central banks, and upbeat market sentiment. European markets advanced for the fifth consecutive week after the Bank of England lowered rates as expected, and German exports were ahead of market expectations. Markets in China soared in the hopes of earnings rebound driven by affordable access to artificial intelligence tools. We begin our weekly review with the U.S. and the non-farm payrolls and new jobs report confirmed slowing but strong labor market. Non-farm payrolls slowed to 143,000 in January from the upwardly revised 307,000 in December. The jobless rate edged down to 4% and wages inched up to 0.5% from the previous month and increased the annual growth to 4.1%. The U.S. economy added an average of 166,000 jobs a month, totaling 1.99 million in 2024. Slower than the average monthly increase of 225,000, totaling 2.7 million in 2023. Despite the slowdown in job growth, policymakers are likely to focus on wage increases, which is far higher and inconsistent with the Fed's target rate of 2%. U.S. job openings in December decreased to 7.6 million from the revised 8.2 million in November, as businesses continue to struggle to fill positions demanding advanced technical skills and professional experience. U.S. international trade deficit continues to surge as businesses and consumers rely on cheap goods made in China. Moreover, the threat of additional tariffs forced businesses to front-load goods before the start of 2025 and the new presidency. For 2024, the goods and services deficit increased to $918 billion from $785 billion in 2023, after imports rose faster than exports. Exports advanced to $3.2 trillion in 2024 from $3 trillion, and imports rose to $4.1 trillion from $3.9 trillion in the previous year, respectively. On the screen, you are seeing the monthly breakdown of the U.S. trade deficit over the last 12 months. The Bank of England lowered its benchmark rate by 25 basis points to 4.5%, and the central bank cut the rate for the third time since the rate-cutting campaign started in August last year. The central bank reiterated its goal of reducing rates gradually as the need to control stubborn service inflation outweighs the mounting economic growth worries. The Reserve Bank of India lowered its reference rate for the first time in 5 years. The central bank lowered the repo rate by 25 basis points to 6.25%, but kept its stance neutral, disappointing market watchers who were looking for a shift to accommodative stance. In other economic news around the world, retail sales in the Eurozone edged up slightly and consumer price inflation accelerated in January. Germany's industrial output adjusted for inflation dropped sharply amid weakening orders related to automotive industry. Germany's international trade shrank after exports and imports contracted amid weak domestic demand and rising competition abroad. Japan's household spending accelerated in December, driven by a surge in food prices. However, annual spending or annual household spending adjusted for inflation decreased for the second consecutive year. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury hovered near 4.5% after the latest labor market updates confirmed slowing but solid job market. Texas crude oil prices edged down by 2% to $71 a barrel amid worries that the U.S. may permit plans to increase oil exploration despite weak global growth demand. Natural gas prices in Europe advanced 4% to 55 euros per megawatt hour as a cold wave boosted demand and depleted storage levels to 51% capacity, down from 69% a year ago. The euro eased to $1.04 amid worries that the rate differential between the eurozone and the U.S. is likely to widen as the U.S. Federal Reserve is in no hurry to lower rates after the latest non-farm payrolls data. The yen strengthened to 151 against the dollar as investors surmised that the Bank of Japan is more likely to raise rates after household spending rose at a faster pace in December. Let us shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite extended the rally to the fourth week after investors reacted to the White House's flip-flop of tariffs and barriers to shipments from China. Strong earnings from leading tech and industrial companies supported the recovery in the market sentiment also. European markets extended weekly gains to the fifth week in a row, and benchmark indices in Germany and the UK traded near new highs after the Bank of England lowered its policy rate by 25 basis points. The Nikkei 225 stock average extended weekly gains following a rebound in artificial intelligence-related stocks on Wall Street. Hong Kong and China indices advanced in the holiday-shortened week as semiconductor and tech stocks led gainers and amid optimism that the availability of cheap artificial intelligence technology will benefit domestic tech companies. Indian market indices extended the rally to the second week after the Reserve Bank of India delivered its first rate cut in nearly 5 years. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Alphabet Incorporated, the parent company of Google and YouTube, is planning to spend $75 billion in artificial intelligence infrastructure. Advanced Micro Devices dropped 9% after the graphics and chip designer reported declining earnings in the fourth quarter. Infineon Technologies surged after the German semiconductor manufacturer raised its full-year 2025 guidance. Toyota announced higher demand for its hybrid electric vehicles, but the company expects to produce fewer vehicles in 2025. Uber Technologies slumped 7% after the ride-sharing app and delivery platform operator offered a conservative estimate of gross bookings in the first quarter. Siemens Healthineers reported higher-than-expected sales in its first quarter ending in December, despite order delays in China. Costco Wholesale said comparable sales in January jumped almost 8%, and e-commerce sales climbed nearly 14% from a year ago. Yum Brands, the parent of Pizza Hut and Taco Bell, said same-store sales worldwide rose 1% in the fourth quarter. Led by Taco Bell sales increase of 5%, Pizza Hut same-store sales declined 1%, and KFC sales remained flat. Amazon.com reported strong revenue and earnings in the fourth quarter, and the company said first quarter revenue growth is likely to slow to between 5 and 9%, in fact slowest on record. The e-tailer plans to boost capital expenditure to $100 billion in 2025 from $83 billion last year as it continues to make investment in artificial intelligence. The Walt Disney reported higher earnings in its first quarter, but the company's streaming service is likely to lose subscribers in the current quarter. In the week ahead, investors will remain glued to the next batch of corporate results and inflation reports in the U.S. Coca-Cola, McDonald's, Cisco Systems, Applied Materials, and Deere & Company are some of the leading companies scheduled to release their earnings. On the economic front, investors are awaiting the updates on retail sales, industrial output, and inflation. In Europe, investors are looking forward to the release of GDP data in the UK and in the Eurozone, Germany's inflation, and Italy's industrial output. In Asia, China's Statistical Bureau is scheduled to release inflation reports, and People's Bank of China is expected to announce demand for loans from corporations and households. India's inflation is likely to weaken, and trade balance is expected to improve amid weakening rupee. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rudera.com, keep up with financial industry events on eventsinamerica.com, Review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next